Hello. Welcome to this webinar today, where we're going to discuss a key product in the advisory intro package developed by ESS BIZTOOLS, the 52-week business enhancement system. I'm Peter Towers, Managing Director and Founder of ESS BIZTOOLS. I hope you're having a wonderful day. I'd just like to work through the issues with you, because this is the material that we utilize to develop our thinking on what accountants need to provide to SMEs. SMEs need more support throughout the year. The MYOB CEO, Paul Robson, identified some very important issues in an article in the Financial Review in February this year. Basically, he indicated that fiscal management skills were not evident in most new SMEs that MYOB had surveyed. He indicated that after 6 months, a lot of these businesses encountered problems that probably should have been sorted out at the very beginning of their business career. There was a lack of understanding of payment terms required by suppliers. There seemed to be an assumption that they were automatically going to be granted 30-day payment terms, whereas some of them weren't. They were new accounts, so they were basically put on cash or 7 or 14-day payment terms, which affected their cash flow. Robson also said that a lot of the businesses that they surveyed were unfamiliar with credit terms for customers. My belief on all this is if you don't have to give credit, well, don't give it. But in a lot of the business world, of course, it's an expectation. But some of these SME people assumed that they would be paid within 30 days. Well, we know that's not the case. In fact, Australia has one of the highest debtors' days outstanding in the world. And that again affected their cash flow forecasts. And then on the major payments, they hadn't factored in that they had to pay the tax office, the GST that they had charged their customers, less the amounts they were able to claim back for the payments they'd made. Robson said that if they had a budget and a cash flow forecast, it was not realistically drafted. So the question arises, who drafts budgets and cash flow forecasts for people going into business? Is your firm? Do you promote to your would-be clients and people contemplating going into business that you can help them from day one or even going back prior to day one of commencing their business, so that their budget forecasts are correctly prepared, so they've got an appreciation of the amount of money that they really need to run a business? And part of that would be making inquiries with suppliers before they buy the business or start the business. What will be the payment terms for suppliers of product? And in some cases, they will be placed on cash, on delivery, or even cash up front when they place an order, because they're a new account. And there are a lot of business failures occurring. So suppliers are becoming very wary. Credit customers do not pay promptly on a 30-day basis. Pardon me. And the fact that Australia has one of the highest debtors' days outstanding in the world, if not the highest, really supports an argument that your clients should have a complete understanding of the debtors management system, or they should be retaining your firm to supervise their debtors, to make sure that the invoices are being properly prepared, that the due date for payment is shown on the invoices, that at the end of the month, if they're issuing statements, the statements are dispatched by email within 24 hours at the end of the month, that if people haven't paid on time, there's telephone calls made to them, to remind them that a payment was due. These problems highlighted the high need for regular financial briefings, not just once or twice a year, but every month throughout the year. Some of these people starting off in SMEs may have previously worked in larger organisations where they know that systems are in place. In some instances, in the background, they know they're there. They're not directly involved in them, but they know that people rely on getting information from the systems. We at ESS BIZTOOLS believe that it should be the same approach for SMEs. They need systems in place. They need an accounting person to maintain those systems. That should be accounting firms who are committed to assisting SMEs. The once a year annual set of accounts and a tax return does not meet the requirement for what SMEs need in 2024. You're at the coalface with the SME market. You can help them to survive so that you can then grow with them. As they grow their business, they scale it up, they require more services. But they need assistance at the very beginning. They need an appreciation of how all this fits together. So there's more support during the year. So let's look at the technology and communications which enable services to be provided in 2024. Larger companies employ a full-time accountant or even chief financial officers. These executives supply feedback to the leadership team daily, weekly, monthly, some businesses literally hourly. The executives are receiving on their phones or on their computers updates of what's happened. What was the trading in the last hour? What were the key performance indicators that were emerging from the business? Today's technology and communications enable accountants to service clients all over Australia from wherever you're located. And you can have the same relationship with your clients as what a chief financial officer employed by a large company has with their leadership team, because it's very unusual for a larger company just to be in one office somewhere in Australia. They normally have a head office and then a number of regional offices, yet all that is coordinated and the reports and the information is flowing around the organisation. Not much difference to what the SME requirements are. A lot smaller, of course. SMEs around Australia are showing a willingness that they want to scale up their businesses. They're reading the Financial Review and the Australian, and even their local newspapers when there's a local star company emerge. And we now know that some of these companies that are now stock exchange darlings were SMEs in someone's local area only a few years ago. Some of the shareholders in those companies, the directors, the founders, have become billionaires. There could be a lot more people that could go down that path, but they need assistance. They need encouragement. They need the information. They need the communication with an experienced accountant who has taken the trouble to understand their industry and how their business operates within that industry. And that's one of the key points that we're talking about. There's support for these types of companies. There are government grants. The federal government has finally released the funding for the Business Improvement Grant, which has taken over from accelerating commercialisation. There's grants of up to $5 million available for companies with turnovers under $20 million. That grant's on a dollar-for-dollar basis, and there's another grant to help people get their innovation to a certain standard of up to $250,000 on a dollar-for-dollar basis. SMEs really need their accountants and bookkeepers to be committed to helping them on this journey. Not many of them will do it on their own. I have been a senior partner in an accounting firm and a consultant. I've been a consultant for the last 24 years. And prior to that, I was in a public company environment as the company secretary and chief financial officer. So I think I've seen the overall scene on a fairly wide basis. There are opportunities. There are some very good companies out there, but they do need to know that they have the key people to assist them. And it's not only accountants, of course. They need marketing people. They need sales people. They need product development. Some of them need advice from a good patent attorney. But it is a team. It's very lonely and very awkward for someone to scale up their business if they're just a one-person band working on their own, irrespective of how many people they got working for them. They just run out of hours, run out of energy to handle it. And some of them are running good businesses. So this is an opportunity for you to be able to supply those services. So where do you start on all this? I think you need an appreciation that offering what we're calling the 52-week of the year system is different from the preparation of an annual set of accounts and a tax return. And I'm not criticizing that process. I did it myself in my own firm. But I always tried to work with businesses that were aspiring for something different. So we offered them advisory services. I think it starts with you undertaking due diligence on your clients. You need to know them 1 inch wide and a mile deep. You need to know a lot more about their business than what most of us know about a client that we're preparing an annual set of accounts and a tax return for. I really believe that because I've been there and I've observed just how much how more information I know about someone that I'm acting as a virtual CFO for, or a consultant trying to get them into an investment ready status so they can raise capital. You learn a lot more about them. You need to know that about them because you need to understand their systems. So the 1 inch wide, 1 mile deep due diligence analysis is the start of this overall process. What's their business? Where are their weak points? Where is their lack of internal control? Because they haven't got someone like you working for them at present. They haven't got someone who understands internal control and has been trained to look for weak points. That's the start. And by doing this, you will gain an appreciation of the processes within the business. And you need to document these so that your team members can be made aware. What's the planning that goes on in this business for their activities, whatever their activities are, whether they're a tradie type business, an inventor, a retailer, a professional service type organisation. They need to plan their activities. Who are their customers? Where are they located? What feedback do they get from their customers? Do they regularly communicate with them? Have they got a customer advisory group? That's just some of the questions that you could think about with customers. And by being involved in that, you as the virtual CFO will gain an appreciation of what the customers really think about this business. And is there a great level of support there? Are they enthusiastic about the services and the products that your client is providing to them? or are they just another supplier? The development of the business's intellectual property. Many experts claim that intellectual property is the big asset that's not on the balance sheets for a lot of businesses, and I agree. Are you conscious when you're advising a client on an annual basis, maybe once or twice a year, because you're preparing their tax return, as to what the value of their intellectual property is? I think probably not. But if you're involved on this more continual basis, you're more part of the team, you need to be thinking about the intellectual property, the corporate knowledge within the business. Are they documenting it? Or is it all go home each night in someone's head? And if something happens to that person, or they decide that they've had enough, or that they're ill, or they get injured in an accident, that intellectual property can disappear very quickly. Now, a lot of CEOs probably understand that, but are too busy in the day-to-day management of their business, surviving in the rat race that is out there. But your role can be to prompt them on that. Talk to the leadership team. Start recording it. It's really part of succession planning, so that the knowledge of the organisation is recorded and is available for training of future people, not just all the leaders, but the team. And how is that intellectual property safeguarded? How is it protected? It starts with the employment agreements with the team members. But it can cover a whole range of other activities, can't it? Tradesmen and other contractors being employed to do work within the company, are they required to sign an assignment of intellectual property, a confidentiality notice? If not, I'd suggest you talk to your clients about it and get the solicitors for that client to draft an agreement for them, get people to sign it, then make sure they safeguard it. Because it's your client's intellectual property that those contractors are working on. And if it's something unique that's been developed, perhaps there should be a consideration as to, well, could we claim a research and development tax offset for this? Should we be talking to a patent attorney? Unfortunately, the people running businesses, especially an SME business, tend to be very busy, and they might not think of these things. It might be one of the issues that wakes them up at 3 a.m, but nothing much gets done about it because they just haven't got the time. Because they haven't got a chief financial officer type person, company secretary, who in a larger organization handles these things. I know, I was one. All sorts of things got put on my desk by the CEO, some of the other leadership team members. Now, I didn't handle them all. Some of them I outsourced to legal firms and to patent advisory firms, and others to other people in the organisation. But my role then was to collect all that and bring it back to the leadership team and to the CEO for discussion. That can be your role, because that's what SMEs are looking for. What's the purchasing process in the business? Have a close look at it. Is there any problem areas on internal control? Who makes sure that the products that have been ordered, the quantity and the quality is actually received, and that then payment is authorised? Or are some dubious payments going through? No one's picking it up. Is that because there's no real analysis of the inventory records, which happens in a lot of businesses? Everyone's too busy. Do some key performance indicators on the inventory. What are the fluctuations from one month to the next? What caused that to happen? These are the sort of questions that chief financial officers are asking, or their team members are asking. What's the sale process? Who sets up the terms of trade for the customer? Who tells them when they got to pay? Who makes the decision as to whether there's going to be an application made to protect that transaction? What about export transactions? How's your client going to be paid? Where does the credit got to be established? Have they been established? You need to make sure that they're abided by line, because otherwise the banks will refuse to pay on a letter of credit. But what other payment arrangements have been put in place? And that brings in the whole debtor system. Is it being properly managed? Are due dates for payments been shown on all invoices? Statements been sent out promptly? The employment process. Check that there's no phantoms on the payroll. Wouldn't be the first time it's happened. It's happened quite a number of times over the years. Make sure that the systems cover that possibility. The agreed payment rate. What's the records that have been submitted to justify the payment? Timesheets. Reports of working hours. What team training and motivations occurring in the business? Now, you're not going to be the only person that could run team training, but you can from the financial, company secretary, accounting, bookkeeping point of view. Run some team training sessions, especially for the leadership team. I think it's a good idea to sit down with the leadership team and work through one-on-one and make sure they can read the financial accounts. I found in my tenure in a public company that some of the senior people had great difficulty reading financial reports. No one had ever taken the time to talk to them about it. And incidentally, one of the things you might find is that those leaders, whether they're foremen or sub-foremen or leading hands, can all make some valid suggestions as to the information flow that's coming to them. You know, companies at times go to great efforts to produce wonderful reports and send them around, and the CFO or the general manager sits back and says, we've done our job, we've communicated, and no one reads it because they don't understand it. They weren't asked to contribute. They've got common nicknames that they call various processes. And quite frankly, some of them, that's the only name they know. So we produce a report as accountants and call it a key performance indicator. Some people have got no idea what that means, because if they were getting that report, they've got a different name to it. I saw one once which is as simple as need to know. You need to know this every day. And when I was involved as a CFO, I sat down with the foreman of one of our major meatworks at morning tea and asked them what they thought of the new format of key performance indicators that we were producing. And one of them said to me, after looking at me for about half a minute, and said, "Did you produce that?" I said, "Well, I edited it and one of my team finalised it, and yes, we've put it out." He said, "I don't understand a word that's on there." And he said a few more words as well in that comment. So I said, "Okay, so I'll come back here at lunchtime. Can we have another meeting and you tell me what you want on it?" Because he had made the comment, yes, he needs information, he knows that, but tell me what I need to know. So we redrafted the document. Some of it was just changing the words, calling it what they called it. I just went back and briefed the manager and the CEO and said, well, we're changing some of the terminology, because if we want to get this information to flow smoothly, we need to make sure the people who are producing it or who are reading the reports understand it. They agreed. So team training and motivation and making sure people understand it's very important. Now, the CEO of your client business probably hasn't got the time or indeed the inclination to do all that. But they'd love you to do it because they know it's necessary. The leadership team training can be interesting. Can also, not besides understanding financial accounts, it can be corporate governance areas, the minute type process, especially if they're on the board of directors. The rhythm of meetings is very important, I think. And you can influence that by saying to the CEO that you will organise this rhythm of meetings. And you can have the meetings utilising the communication technology, Zoom. So what daily meetings are going to be held? What weekly meetings and what monthly meetings? Very important to get into a routine. Some people have their daily meeting at 7:30 a.m. Everyone that can attends. And then a weekly meeting to review the results is mainly the purpose of weekly. We're going to talk more about weekly reports in a moment. And then monthly will be to review the overall profit and loss, the key performance indicators, the balance sheet, production targets met and not met, how things be improved. One of the big things that businesses need is communication. And I found over the years that it's this CFO or company secretary or internal accountant that can coordinate these things better than, in lots of ways, than what the CEO has got the time to do. It's also important to identify the information that the CEO and leadership team need for them to make decisions, and they need it promptly, not 25 days later, or most definitely not at the end of the year. They need it now so they can correct a problem. That's what management's all about. If there was a problem today, we should try to fix it today or tomorrow, or within a maximum of 5 days. It's been fixed, not drag on and say, oh yeah, we'll get around to fixing that one day. That's how businesses end up in difficulty and go broke. So it all starts with the predictive accounting reports, the finance projections. I think it starts with the business plan, because the business plan is the key document that the leadership team's developed, hopefully with their virtual chief financial officer as the coordinator, as the scribe, putting all this together. But it's important that you get their buy-in. And I've worked on hundreds of business planning projects. The only ones that were really totally unsuccessful were the ones that the leadership team didn't want to be involved at all. And that was when I was a lot younger and probably accepted that. These days, if a client tells me they're not going to be involved in the business planning process, I wouldn't attempt to do it. I have said it. It was a threat, and the client backed down when he told me he was too busy to come to a business planning meeting. I said, well, I'm not interested in producing it because you're going to be dissatisfied. You're going to use excuse, oh, you never contributed to that, when things don't work out the right way. You need their buy-in. It's not only the CEO, of course, it's the other levels of management. Now, if they're that vital to the day-to-day activity, they can't spend a day in a boardroom environment thinking about planning for their business future, break it down into 3-hour sessions and prepare your agenda around that basis. And list what we're going to discuss for this 3 hours, and then let them go back onto their phones and go back to work. And in fact, you might find that they're more inclined to cooperate, because a lot of these executives really don't like sitting around a board table and talking about things. They're thinking about what's going on outside, or 10 miles or 20 miles down the road, wherever their operational unit is, what problems are going on. And they get agitated if they're not answering phones virtually every couple of minutes. So you need to accommodate that and think about it. But it all starts with the business plan, because the predictive accounting reports should be the financial interpretation of the business plan. This is what's going to be achieved, preferably over the next 5 years. But to get someone started, maybe you just do the next 12 months. But ultimately, that should be the plan. We're doing a forecast for 5 years so they can see where their business is going. I think the key requirements are that there's a budget for each business operation, monthly and then annual. There's key items for each key account item: debtors, creditors, inventory, capital expenditure. Don't hide that in the cash flow forecast. Detail it out so it can be evaluated, so that debtors' days outstanding can be calculated. I got asked to look at some financial projections a couple of years ago, and I got given a report because I was consulting to an accounting firm to help them. And I said to them, will you send me the last set of financials, please? Oh, you want them? I said, yeah. So they got sent, and I said, have you calculated debtors' days outstanding and creditors' days outstanding? Oh, no. Well, we got those calculated, so I knew what those figures were. So then I started looking at the financial projections. Now, I'd looked at the debtors' days outstanding, and it was around 70 days at the end of the the financial year. When I looked at this budget and cash flow forecast, it was obvious that there was an assumption that everyone was going to pay on a 30-day basis. So that's not the way the system works. How long is it since you had 30 days outstanding on debtors' days outstanding? And they didn't know because they hadn't been preparing debtors' days outstanding as a key performance indicator until we suggested it only a few months earlier. So they had no history, but it definitely wasn't 30 days. And what the effect of that was is straight away their cash flow forecast was incorrect, because they were assuming everyone was going to pay them on a 30-day basis. Yet their average as of 2 months earlier, the end of the financial year, was 70 days. So it made a big difference. Pardon me, the same analysis needs to be done on creditors. What is their creditors' days outstanding? I think it's a good idea if they've got key suppliers who are demanding payment on certain payment dates, might be 21 days or it might be 28 days, that you prepare a prompt creditors figure in the balance sheet as distinct from a general creditors, and then calculate the prompt creditors' days outstanding to give meaningful reports. We can then get the cash flow forecast, which is obviously reliant on all of the information that's flowing around: debtors, creditors, wages, capital expenditure, research and development, all the activities that are happening in the business, and the projected balance sheets. So the balance sheet becomes the pictorial history to be able to sit down and talk to the CEO and say, this is what we think you're going to look like. As long as these things happen, you've got to qualify it. Now, it's vital for their businesses so they can see where they're going to go. And you can act as a storyteller to be able to articulate what this means. What are the key parameters? And make sure that you're indicating to your client and to their leadership team, this is the documentation of the business plan that they sat down together with you to prepare. Therefore, they will have ownership. It's their document. And that's very important because they've got to implement it. So that's the prelude to the 52-week business advisory system. I don't think it works as a system unless we've gone through that process I've just referred to. Let's just go back through it. The due diligence review, 1 inch wide, 1 mile deep, is very important. Then it might take an hour, it might take half a day. Could even take longer, I suppose, for some of your clients. But it's a great familiarization process of doing that. And then we've got the business plan. The business plan process with the team, and then the predictive financial accounts, the budgets, cash flows, projected balance sheet. So that's the lead up. And now we're coming to the, in effect, the day-to-day activity of the business. Things happen 52 weeks of the year in most businesses in Australia. Or if that business gets shut down for an annual holiday, maybe it's 48 weeks of the year. But it's somewhere between those two figures, unless it's a totally seasonal business. Then you'd adapt accordingly, of course. So the 52-week advisory system looks at an acceptance that the leadership team requires information. When you analyse this with your client, I'd be very surprised if they do not need information daily, weekly, monthly. And then it's repeated again, daily, weekly, monthly, daily, weekly, monthly. And that's a significant amount of this information is going to be financial information. Now, what could be covered daily? Well, you sit down and think it out with your client, but it could be yesterday's performance, the number of customers, the sales, average sales. I've seen some systems whereby the leadership team are getting information on their phones virtually every hour, sales in the last hour, or number of customers in the last hour, or number of something, all means something, so they can monitor what's happening. The weekly information, I think, is vital, and this is the big area that's probably lacking in many of the SMEs. But the big end of town really implement weekly controls on their businesses. I know that. I was in the middle of that type of operation in the company that I was involved in. I think the important document is the weekly performance report and a profitability estimate and the key performance indicators. It can be done. Big businesses do it. Woolworths, Coles, IGA. I've worked on some IGA stores on implementing their systems. They've got a weekly profitability, key performance indicators. They know what the results were. Woolworths and Coles do it. Basically, within 48 hours of the end of a week, the information should be available. So it can be analysed by the overall general manager or chief financial officer with the individual business operation manager. Sure, there's some estimates go into that sort of calculation, but you'd be amazed how accurate you can get and how meaningful that information can be. Because if there was an expectation that the gross profit percentage this week was going to be 36% and it comes in at 24%, there is a problem. Someone needs to determine very quickly what went wrong. Was there theft? Was there complete wastage? Was there a problem in the production that a whole stack of material got thrown out? Were errors made somewhere? Were the invoices done wrong? Needs to create an examination as to what caused that problem so that that problem can be fixed. This is the management in operation, not waiting to the end of the financial year when an annual set of accounts has been prepared as part of the tax return process and then saying to the client, oh, geez, your gross profit dipped. The client says, oh, did it? What caused that? Client asking you. It's one of the real improvements that are needed in businesses. Now, you can set up the system. We got all the templates for everything I'm talking about within the ESS BIZTOOLS systems. You train your client. One of your accounting team members would be monitoring that. You can do it via Zoom and check the process. And obviously, if you get a result like I just said, expectation 36%, achievement 24%, you'd immediately have your team members swing into action to make sure that it wasn't just a clerical mistake in the calculation of the estimate. And then it's probably going to get passed back to the management within the organisation to find out what that problem was. Monthly information. The monthly information should be a profit and loss account for each business activity, should have key performance indicators and business metrics, and a comparison to budget. And another matter which I forgot to put in the slides was a reconciliation of the weekly results with the monthly result. Because you need to make sure these weekly estimates are being prepared as accurately as possible. Otherwise, the leadership team will lose confidence in that weekly report. We want the weekly report to be as accurate as you can get it, so that there will be a reaction. They will accept the figures and then set about trying to find what caused that problem. What went wrong? And the comparison to budget. And then we can move into the balance sheet analysis. Now, this is every month, because what Mr. Robson from MYOB was saying when I read his articles was that there was no control over these issues. If you're committed to the weekly / monthly management system, there will be control. The creditors balance and days outstanding. And segregating your prompt creditor payments, I think, is an advantage. The general creditors, debtors balance and debtors days outstanding. What's been done about the debtors? Debtors can be a huge problem for businesses unless there's control. Work in progress, capital expenditure, research and development, cash flow forecast, a rolling cash flow forecast update. You know, what's the revised cash flow now based on the actuals we had at the end of this month? And one of the ones I've missed out there, my apologies, is inventory. What's the situation on the inventories within the business? Now, the whole purpose here is to make sure this is routine every week and month. These are the calculations being made. And that then you, as the virtual chief financial officer for your client, can sit down, write a report which would cover most of these items, highlighting the variations, highlighting where it varies from the budgets that you prepared, so that there's meaningful feedback immediately given back to your client. So that if there are problems, debtors days outstanding, we budgeted at 35 days and it's now 48. Well, someone needs to be concentrating on debt collection for the next few days to get that back down to around the budget figure. If there's a problem with inventory turnover, someone will be given the job to fix it. That's what management's all about. But management needs information, whether it's a multinational company, a large public company, or an SME business. They need information. And the key suppliers of that information is the accounting team, the team you're leading as a virtual CFO. So in the advisory intro package that ESS BIZTOOLS has produced, the advisory intro is primarily targeted at bookkeeping firms and accounting firms that have not previously been involved in advisory services. If you want to get started, you can start there. We have a package built into this that will assist in getting started. And in our starter package, we've refined the system a bit more, which requires more information to service the client's requirements. And that's the package that is really important for small SMEs, what's contained within the starter package. And then we move into the advanced package, which includes all of the material that we have produced to facilitate financial performance and requires the ongoing production of financial information to assist management. I think you'd have a very good system for your client if you're using that. And then we got the financial forecasting package, which includes all the material contained in the advanced package, together with the subscription to the Plan Guru financial forecasting software and expert training on the use of the Plan Guru software. Pardon me. To assist in the production of all of this information. So that's the overall system that we've developed within ESS BIZTOOLS that we call the 52-week business enhancement system. Our vision is to assist accountants and bookkeepers to deliver an outstanding range of services so that you can assist and support your SME clients on their business journey. Please contact us if you'd like some additional information. We are here to help you. You can send me an email, peter@essbiztools.com.au, or give me a phone call, 074724 1118. Stay safe. Have a great day. Goodbye. And I look forward to hearing from you. Thank you.